Welcome to my channel. Today we are going to explore the fascinating history of Bitcoin and how it changed the world. We will be taking an in-depth look into its origin story, so settle in and enjoy the ride. Introduction. Bitcoin was created as a response to the 2008 financial crisis by an unknown person or group of people using the pseudonym Satoshi Nakamoto. After the crisis, people felt that the current banking system was untrustworthy and wanted a better way to store their money. Bitcoin was created as a way to provide people with a secure and anonymous way to store their money without relying on banks. The technology behind Bitcoin, called blockchain, was also seen as a way to revolutionize the way money is transferred. Blockchain is a decentralized database that records every transaction and makes sure it is secure and accurate. History. Bitcoin was first proposed in a white paper published by Satoshi Nakamoto in 2008. The paper outlined a system of digital transactions that could be used to replace traditional forms of payment. The paper proposed the use of a distributed ledger system known as the blockchain, which would be used to record and verify transactions. So, what is blockchain? Well, blockchain is a revolutionary technology that enables secure, fast, and transparent transactions. It's a decentralized, distributed ledger technology that stores data in a secure and transparent way. Blockchain technology is used to create a public ledger of all transactions that have ever taken place on a given network. Each transaction is verified and recorded on the distributed ledger, and each node in the network can view the ledger. This makes it impossible for anyone to tamper with the ledger, which makes blockchain technology very secure and reliable. Blockchain technology has been used in a variety of applications, from banking to healthcare to supply chain management. It has the potential to revolutionize the way we do business, and it could have a huge impact on the global economy. The first Bitcoins were created in 2009 when the first block of the blockchain was mined. This event is known as the Genesis block and marked the beginning of the Bitcoin network. Since then, Bitcoin has become increasingly popular, with more and more users joining the network each day. The value of a single Bitcoin has also risen dramatically, with the price of a single Bitcoin reaching nearly $69,000 in December 2021. Mining. In order to create new Bitcoins, a process known as mining is used. In mining, powerful computers solve complex mathematical equations in order to create new blocks in the blockchain. Miners are rewarded with newly created Bitcoins for their work. In addition to creating new Bitcoins, miners also help to maintain the integrity of the network by verifying and validating transactions. The process of mining requires a lot of electricity and computing power to operate. First, miners need to set up their computer hardware, which is usually a powerful graphics processing unit, GPU, or application-specific integrated circuit, ASIC. Then, they need to join a mining pool and connect to a blockchain network. Once they are connected, they can begin to solve the mathematical puzzles to earn coins or transaction fees. When a miner solves a puzzle, the solution is verified and added to the public ledger. This process is known as proof of work and is used to ensure that all transactions are valid. It also helps to prevent double spending and other malicious activities on the network. Furthermore, it helps to prevent the blockchain from being tampered with, as all the blocks are linked together in a chain. Adoption. Since its creation, Bitcoin has been adopted by a number of businesses and organizations. Major retailers such as Microsoft, Expedia, and Overstock now accept Bitcoin as payment. In addition, a number of banks, including Barclays and Goldman Sachs, have begun to explore the use of Bitcoin and other cryptocurrencies. But how exactly is Bitcoin being implemented? Well, it depends on the specific company, but the most common way is by using a payment processor or a Bitcoin wallet. A payment processor allows companies to accept Bitcoin payments from customers, while a Bitcoin wallet allows them to store and manage their Bitcoin holdings. Another way is by using a Bitcoin exchange. These exchanges allow companies to buy and sell Bitcoin, essentially allowing them to trade like any other currency. Finally, some companies are even developing their own blockchain-based applications, which they use to facilitate transactions on the Bitcoin network. So, As you can see, there are a number of different ways that companies can implement Bitcoin. It's an exciting technology that has the potential to revolutionize the way we transact and do business. Conclusion: Bitcoin has come a long way since its creation in 2009. It has become the world's most popular cryptocurrency, and its value has risen dramatically over the years. As more businesses and organizations begin to adopt Bitcoin and other cryptocurrencies, it is likely that its popularity and value will continue to grow. If you're interested in learning more about cryptocurrency, be sure to subscribe to our channel and check out our other videos. With the right knowledge, you can make informed decisions about investing in the cryptocurrency market. Thanks for watching.